Well, the local market bounced back after early caution over Europe's debt crisis, but couldn't keep up the momentum. I spoke to Martin Lakos from Macquarie Private Wealth a little earlier. Well, Martin Lakos, very modest losses on the local markets, really. Should we take some comfort from that?
Yeah, look, I think so. Tiki, not a bad day, really. We were down about 40 points or 1% in early trade, and that was following another fall on the Dow Jones, down 104 points. That's the third consecutive triple-digit fall. We've only seen this last time in September of last year. So you overseas and US markets certainly a little bit rattled, but we held up quite well with some good performances largely out of the defensive sectors. We had the energy sector, the worst performer, down about 0.7%. The industrial was weak as well, but as I mentioned, those defensive held up. In fact, Telstra rallied about 3 cents. We had healthcare sector up about 0.6%, and Coca-Cola, also one of those defensives, up 16 cents.
Now, resources, of course, have been having a pretty hard time recently, and I see Atlas Iron today was still out of favour despite a recovery in production numbers.
Yeah, it actually looked a really solid recovery for the June quarter production. Mind you, part of that was catch-up from the March numbers, which were affected by a cyclone. But, yeah, we saw production up 25%, or shipments, should I say, up 25%. They noted that their average per tonne received was $122 per tonne for iron ore. Now, that's hardly a number to be sneezed at, given there's all these so-called concerns regards to slowdown in global growth. So still the iron ore price is holding up pretty well, as is quite a few of the other commodity numbers. They're holding cash of about $400 million, and certainly they're well positioned if we were to see an upturn in iron ore pricing.
Production numbers also from Oz Minerals. What did the market make of that?
Look, another stock that really has been hit really hard over the last few weeks. They closed down 10 cents to $7.43 a share. But despite that, copper production was down 6%, and also the gold production was down. Now, you've got to look at Oz Minerals in terms of looking across all the averages across 4 quarters, and they are still predicting reasonable full long-term production in terms of the total guidance. The other positive thing was that they will be giving some further guidance on an upgrade on resources. And also the board has approved an extension in their exploration decline. That's a new shaft to go down to their Carrapateena development, which is about a kilometre away from their main Prominent Hill mines.
And finally, I see Property Group Stockland is to lose its long-serving managing director, Matthew Quinn. What did investors make of that?
Yeah, look, the stock price was hardly moved. It was down a couple of cents to $3.18. Matthew Quinn's now announced, along with the board, that he'll retire in February, providing they have found a suitable candidate. So they're conducting an internal and external search for a new MD. Quinn's been there for about 11 years, so he's certainly had a fairly long tenure and obviously pretty tough times over the last 2 or 3 years.
As you say, a tough climate to exit in. But Martin Lakos, thank you very much for joining us.
Thanks, always a pleasure, Tiki.